Hello, everyone. This is just an option screener that I've been looking at, and I'll show you how I've been toying with something else in a moment. But keep in mind, this is strictly for educational and informational purposes only. Please do not think this is any kind of investment advice whatsoever. Know that there is risk involved in trading, and you can lose all of your money, or if you're trading with a margin account, you can lose even more than all of your money. So please be cautious and be aware of the risks surrounding trading. So now, here's what I've been looking at. I want to figure out, when I'm looking at something to trade, let's say TNA. Here's one that I've been looking at for a while. They took away my shares. That's fine. Fantastic. I'm completely flat on this. All right. I'd like to get in. I'd like to get in by selling puts, and I'd like those puts to have maybe a 25% chance of getting assigned. So my deltas, I'm going to use that as my proxy. So 25 deltas, fine. I could look, let's say maybe the 35. All right. The markets are closed, so this is going to be a little off. All right. Maybe I look at the 34 for next week. Maybe I look for, I don't know, let's look at the 33 for the week after. But not just that, I'm trying to figure out how productive can I be with the amount that I'm just putting out there. So for example, this thing is giving me, let's just go with the bid prices. Let's say 50 cents over 35. All right. Well, what would that be as a yield? I can't even do the math. Say 50 cents over 50 cents over 35 bucks would give me 1.4%. All right, about 1.4% for the week. Now, let's look at something that has a similar delta, the similar risk, a 25 delta. All righty, let's look at that for next week. What is that giving me? Well, here I'm going to look at the 34. Well, that's going to give me a little over 2%. All right. But if it's a little over 2%, let's just say 2%, right? 70 cents over 35 would give me 2%. So this is giving me about 1% a week. Well, then it would tell me that I should take, even though this one is closer to the current price, which is 36.91. Well, this is giving me more yield per week. Now, we understand that. Why? Because we know that the VIX is pretty low and the markets are running rampant. They're high, 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 and high. So you're not going to find a lot of discrepancies. So let me go over here and then let me do this. Let me take this off. I don't need that. Here we go. You guys don't need to see my Google Calendar either. But here's something I've just come up with. Oh, are you kidding me? Where is it? Here's this options yield scanner. I want to figure out what is my yield per week. So this is what I have here. Now, mind you, I tried looking up on Thinkorswim come on, seriously? I'm trying to scan. I can find the delta, which is great. And this is the actual delta as opposed to the one that I'm trying to calculate. So you'll see mine have a little bit of error, but the deltas are estimated in my model. Here, the deltas are actually calculated. Days to expiration, I want to look at that too, because I'll look at this week versus next week or the week after. And then I also want to look at that yield per week. I've been trying to find that yield per week. I don't see it. I see return on risk, return on capital. These are all great tools that Thinkorswim has. All righty. The extrinsic, definitely. The delta, absolutely. All right. The days to expiration, we said, fine. Volume, all right, fine if you want to look at it. So there are some amazing tools here, but I just need something more for what I'm trying to do. I'm trying to optimize what I should do. So when I'm looking at this, now mind you, most likely this is going to give me the optimal puts to sell are for next week. Why? Because we know the VIX is low, right? When the VIX is low, there's really not that much error. There's not that much panic. going on. So I'm going to look at 0.25 as we stated, and this would be my maximum delta. It's going to look at the absolute value for my target delta. So even though it says here, it's telling you, oh, come on, Zoom, you're killing me here. Oh, here we go. All righty. So here I want to look at maximum deltas. These are all negatives on the put side. These are all positives on the call side. So I'm going to look at the absolute value here. And so now what am I doing? I want to look for a minimum of a 1% weekly yield, right? Not total. If it's going to be for this next coming week, yes, I'd like 1%. But this is 1% for every 7 days, for every week. Now, mind you, today is Saturday, all right? So already we've got 1 day less than if we had done it on a Friday. And the markets were closed yesterday for the 4th of July anyway. And now I'm going to look all the way out instead of just this week or next week. I'm going to look all the way out till the end of the year. I'm going to keep my minimum bid-ask spreads. I'm going to keep these wide. And the reason why I'm going to keep these wide is because the markets are closed right now. So you might have bid and ask spreads that are very wide. I don't know, but I don't want to keep looking. See, like this one, for example, this is 5 and 29. You know, these are not accurate prices. Why? Because the market's closed. All right, fine. So this I just happened to catch. Let's look at something for the end of the year. Let's look at some. Oh, look at these. 0 and 216. I mean, come on, are we for real? 14 and 75 cents. So maybe I need to make this a little bit wider, but let's just keep it at 50 cents for now. All right, fine. So let's scan some options. And boom, here we go. We have right now it's telling me, oh, wow, look, sell the 35 strike. It's giving you a delta of 24. What did we say? That was for this week. And if we look at this week, the 35, yeah, it's a 26 delta. So there's a little error between my estimated delta calculation and what Thinkorswim is giving me. And that's fine. It's not the end of the world. And what we're seeing it's telling us the date. It's telling us the contract, all right, the 35 put. It's going to expire on the 11th, 6 days remaining, right? 35 has a delta within the 25 that we stated, which was the max. All right, great. The total yield, great. Look at this, about 1.5%. And we said it was about 1.4. Well, the reason why is because we took 50 cents. It's taking the midpoint between 50 and 55 cents. Okay, so that's why this is about 1.5. And then the weekly yield, this is for over 7 days. This is 6 days left. So let's take a look. See right here, there's 6 days left. So now my weekly yield, if I looked at it for 7 days, it would be 1.75. Now, here's a beautiful thing here. This is one thing that I really like to see. I like to look at the expected probability, the expected value. So what am I doing with this? I'm going to look at what chance do I have of winning? Winning, I'm going to frame it as I don't want the shares. I just want the yield. So if there's a 25% chance of making this extrinsic, where's the yield? Oh, okay. If there's a 25% chance of making 1.5%, well, then there should be a 75% chance. I'm sorry, if there's a 25% of being assigned, then there's a 75% chance that I'll make this 1.5% yield and not have to worry about it. So if I multiply just 75% times 1.5%, I should get this expected utility yield. And if I want to look at it for a weekly yield, boom, I just take this and I multiply it by that 1 minus the absolute value of the delta for this put. All right, so I get 1.33. Now, oh, and of course, see, as I mentioned, it took it in between the 50 cent and the 55 cent bid and ask spread, which is what we had right here highlighted. All right, so now take a look at this. I want the best expected yield, expected utility yield. meaning I want this to keep going. If I kept doing this over and over and over again, then this would give me the highest expected yield. We expected that anyway. Why? Because we already said that the volatility is low. So now what am I doing? Let's take a look at these two. Look at these two, this one and this one. This one's giving a higher one than this one. But this one that I'm currently highlighted is ranked greater than this one. Oh, well, why is that? Let's take a look. It's telling you there is a higher weekly yield. That's what I'm looking for. However, when I'm multiplying 1 minus the absolute value of the delta times the weekly yield, what am I getting? I'm getting 0.01 here, and I'm getting 0.009 here. All right. So the expected yield, this one is better than this one. However, the total yield or the weekly yield, this one is certainly better than this one. So which one do you want to do? Right? For me, I prefer expected weekly yield. Why? Because I'm doing this over and over and over and over and over again. If I'm going to keep doing it over and over and over and over again, then if I'm going to do this till infinity, then I want the one that has the highest expected value. All right. So, but that's if we only compared here the 18th with the 11th here. All righty. However, this one right now is telling you it is your best bet. Why? It's the closest one to at the money. It has the highest delta. The VIX is low. It's giving you the best weekly yield. It is giving you the best expected utility yield. It's giving you the best expected weekly yield. And yes, this bid-ask spread is nice and tight at a nickel, as opposed to, what did we have it here for? 50 cents. All righty. Hopefully that better explained what I'm trying to accomplish, and hopefully you enjoyed it.